What is it, Jack?
Colonel, I found something that you should take a look at.
That's EB Games. They're a video game retail store, previously known as Electronic Boutique, and founded in 1978.
I heard they used to sell calculators and computers. What dark days were those?
Luckily, they moved into the video game industry with games such as Metal Gear Solid.
Sounds like a great game. I should play it sometime.
Now is not the time for playing, Jack. EB Games is a serious company.
From sources, apparently they were bought out in 2005 by GameStop for $1.44 billion.
However, they run a monopoly in the gaming industry.
Colonel, someone's going to buy a game.
Take a closer look, Jack. EB Games run on a periodic schedule, which means they record customer purchases of games as a debit to cash, and if they have store credit, sales discount, as well as a credit in sales.
Speaking of in-store discounts, wouldn't you have to trade in games to get the credit?
Correct, Jack. When a customer returns games for in-store credit, they debit accounts payable.
Then they credit sales returns and allowances to account for the change in sale price.
We mustn't forget about how they get inventory to sell. How can you sell games without stock?
When they get games from the companies that produce them, they debit purchases and credit accounts payable. But how do all these transactions affect the financial statements?
Obtaining inventory from suppliers will affect liabilities and cost of goods sold. Obtaining inventory from customers will affect liabilities and sales returns and allowances.
Selling inventory will affect assets, sales, and sales discounts.
It's a dog-eat-dog world out there, Jack. Supply and demand.
Colonel, Fallout 4 is on sale. I gotta go.
Jack, do you copy? Jack! Jack!